No one would fancy the idea of a regulatory body like the SEC being so imposing on a large market like the crypto market. As we've seen in the last few days, a lot about the crypto industry could be subjected to sentiment if a regulatory body does as much as air their opinion. Thing is that the entire cryptocurrency industry is hinged and established based on the fact that it's decentralized. This term is not open to any other complex interpretation, it is just what it is. It means that it's not subject to manipulation by any individual, firm, or company. That is the general idea and the basic principle guiding the work, establishment, and application of every single blockchain or ledger backing any digital asset or token. This also puts it above the influence of regulatory bodies who've had a long-standing approach to regulation of new advents in the financial and investment space. It would be simple to say that they were not so prepared for the crypto industry, which presented a whole new technology offering new opportunities for advancement, which came with its own risk of fraud and illegal practices. As expected, the regulatory bodies could only key into the negative aspects following the events that spiraled since the onset of the crypto industry. Wallets getting hacked, people getting ripped off, and half-baked exchanges. All these factors were a cause for concern in times past, and regulatory bodies must have felt the need to step in and commit to one of their core missions. That is to protect the interest of investors. However, they could not, given that they were limited in their knowledge of what and how to deal with what the crypto industry actually is. It's taken quite a while, but with the new line of action that the SEC seems to be putting in place, are they finally ready to accept the crypto industry? Or are they just going to continue to wish it away? This could ultimately mean something in the long run for any and all cryptocurrencies. Welcome back to Make Money Online. If this is your first time hearing about XRP, please check out our other recent videos so you can get all caught up. Don't forget to like this video and subscribe to this channel in order to receive notifications every time we upload a new video. What is the SEC news that got everyone, including firms and investors who are involved in cryptocurrencies, on red alert? We all know that the SEC is undergoing a period of transition, particularly being in the process of electing a new chair. The spot has been left unfilled since December 2020, and it has taken close to 3 months for a new chair to be chosen. The most recent news says that Gary Gensler is the most likely candidate for the post. In fact, he is President Joe Biden's pick for the post. Gary Gensler, however, is known to be an avid supporter of cryptocurrencies, having been a professor at MIT teaching on the subject. His probable election was considered to be a plus for the entire cryptocurrency industry, and his words that followed were a proof of his opinion of the industry. But what followed at a hearing in the Senate, where he was evaluated by the committee, was not so impressive. He reportedly sidestepped some questions and was particularly dodgy in his response to others. We'll get back to that, but let's quickly address the SEC. According to Lexology, on the 26th of February 2021, the Division of Examinations of the U.S. Securities and Exchange Commission published a risk alert regarding its continued focus on digital assets. Was this a declaration of war on crypto or just a mere step taken to define the crypto industry? The term digital asset, as used in the risk alert, refers to an asset that is issued and/or transferred using distributed ledger or blockchain technology. The class of digital assets include virtual currencies, coins, and tokens alike. The fact that they exist is not a problem as defined in the article. However, it presents a unique outlook into the SEC's view of how the introduction of cryptocurrencies can present a danger to investors. The division believes that the risks lie in activities related to the offer, sale, and trading of digital assets that are securities. What this entails was not clearly presented as to how it is a source of unique risks to investors. It, however, acknowledged that distributed ledger technology or the blockchain has distinct features that firms should consider when designing their regulatory compliance program. There were some comments passed in the mail that this is a bid not directly regulating the crypto industry, but actually presenting a bar through which all companies or individuals looking to create a token, coin, or digital asset for one purpose or the other must pass before being identified as being legally right. This, however, is as good as regulating a crypto, isn't it? The risk alert reportedly puts together a sum total of all the observations made during the research into investment advisors, broker-dealers, and transfer agents regarding digital asset securities. It was a result of efforts committed to provide transparency about the thin line between a crypto and a security. This will ultimately guide the SEC on how to best approach similar matters in the nearest future. In summary, the SEC's division stated that truly a lack of clarity in whether an asset is a security or not could affect the manner in which the asset is used or assessed by the firm or any regulatory body. However, the risk alert makes it clear that the division will be focusing on digital assets generally. The SEC could therefore take steps to evaluate and mitigate dangers that may present themselves through trades and execution of roles to avoid security breaches, fraud, insolvency, market manipulation, and assess the quality of market surveillance and compliance with applicable rules and regulations, if it exists. Hence, they will deal with the management of risks and complications associated with forked and airdropped digital assets, which means they will oversee conflicts that may arise from airdrop events. It was stated that any firm establishing any asset-related operation should conduct a clear evaluation of all risk factors that have to do with legal, compliance, and related obligations. The SEC will also review occurrences of unauthorized transactions, including theft of digital assets, and ensure the controls around safekeeping of digital assets. This literally addresses how companies like Ripple, Ethereum, Flare, and other firms backing any cryptocurrency are to operate henceforth. It also specifically lays down the rules by which other firms who are looking to also go into the crypto space are to operate, and the rules which they must abide by. Back to the SEC chair situation, the details coming from Gary Gensler's hearing paints a rather bleak future for the crypto space in the US, as he could continue to regulate with litigation. It came out that while the SEC may already be on the neck of XRP, Ethereum could be targeted by the SEC as well. His testimony was particularly seen to have a lot of dark gaps that puts a cloud over the whole affairs of the crypto world. He revealed that Bitcoin and other cryptocurrencies have brought new thinking to payments and financial inclusion, but they've also raised new issues of investor protection that the SEC needs to attend to. His emphasis on investor protection in the same breath as talking about if something were security, for instance, was ominous. He believes such an asset comes under the securities law, under the SEC. Any exchange that trades those is in particular a violation of the securities law. This could also mean that blockchains and decentralized ledger technologies can end up being treated like any other company or security, especially if the SEC maintains a technology-neutral position. His most notable statement was the affirmation of Bitcoin as a commodity, which was deemed in line with the previous stance of the SEC. This provides assurance for Bitcoin alone without any direct regard for the safety of any other crypto. This could mean that he's pro-Bitcoin, such as the speculation going around. In the light of both news going around about the SEC notice and Gensler's hearing, the SEC could end up scaring companies into compliance, and that's going to be through litigation and threat of litigation. We'll have to wait and see the direction this takes in the crypto market in the coming days. However, despite the news, the cryptocurrency industry appears largely unmotivated or unaffected, as there were barely any changes in the price trend of most of the top cryptos, except for a few spikes in the ongoing general downtrend. According to FX Street, XRP-USD is trimming the previous losses, trying to snap a 2-week downtrend. Upbeat RSI, bullish MACD favors bull cross on the weekly chart to keep XRP buyers hopeful. 29 cents will be the tough nut to crack for sellers during the further downside. XRP-USD picks up bids near 43.5 cents while trying to reverse the previous day's losses during early Wednesday. In doing so, the altcoin also stays indecisive after 2 consecutive weeks of losses. However, an upswing of 50-week SMA over the 100-week SMA, known as a bull cross, backed by the upside RSI and MACD signals, favor the XRP buyers. As a result, the cryptocurrency pairs run up towards the 47 cents and 50 cents threshold can be expected as short-term moves. Though the 64 cents will be strong resistance for the XRP-USD bulls to crack, before eyeing the fresh multi-month top above 78 cents. Alternatively, a monthly support line near 37.3 cents restricts the quote's further downside, ahead of highlighting 50-week and 100-week SMA levels, respectively around 29.5 cents and 29 cents. It is assumed that the coin could be set to break away from the collective downtrend, and the result would be a solitary run and consolidation at a higher price level. Well, that's about it for now. In our next video, we'll be providing you with new updates about the crypto market and how the XRP price trend is moving. Don't forget to like this video and share it with your friends as well. Hit the subscribe and notification buttons. What do you think will ensue from the new SEC alert? What is your view on how it could affect the crypto market? Please let us know your answers in the comment section below. See you next time.
Hollywood card